Cindy, our survey of supply managers in the United States, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, that leading economic indicators really looking good. Now, it slipped a bit, but it's still in a very, I would say, healthy growth range. The index, which ranges from 0 to 100, anything above growth 50, which is expansion, and 50 is growth neutral. It was at 61.4, so that's strong. I think there were some, at least it's a little troubling that it dropped and slipped. I thought it would be continuing to grow. It is slipping, and of course there are some little troubling signs out there, but when you look at it overall, this economy, this regional economy, the U.S. economy, is expanding, and the likelihood, some continue to talk about a double-dip recession. It's just not there. I mean, we're continuing. The expansion is still not as strong as we'd like to see, though.
But we are seeing probably some issues with what's taking place in Japan, Middle East. That's having some of an impact, isn't it?
Oh, absolutely. This month we asked the supply managers about how they expected the Japanese earthquake and tsunami to impact or affect their supplies, their purchases of supplies. And of course, about 16% expected to have significant, or in some cases very significant impacts. Now that's stronger than what I would have expected. 16%. I mean, that's 1 out of every six plus firms, and that's too strong. And so we're going to see the supply chain. That's where the ripple effects are going to be from the tsunami and the earthquake. We've already seen it, for example, with General Motors having some issues closing down some of their plants because of the difficulty in getting supplies. Ford Motor Company as well. Companies that we survey here in the Mid-America region also having some impacts. So it's going to have some impacts in the ability to get supplies, but also on prices. You know, Cindy, we've talked about previously, supply, our inflation gauge has been up, and it was pretty strong for the month.
But despite the inflation gauge being up, confidence, though, is still pretty high, even with what's going on.
Absolutely. You've got all this political turmoil, of course, in Tunisia, Egypt, Libya, and so on, of course. And then, of course, what's going on in Japan. All this is just really not dampening overall enthusiasm for the economy. Looking out 6 months, the supply managers are pretty positive about what's going to go on there, or what we're likely to see in the next 3 to 6 months, and that's good. I mean, it doesn't hurt, of course, that the Federal Reserve has been cranking up the old printing press, putting record levels of dollars out there. Of course, the dollar has cheapened, gotten weaker, and of course we've got some bubbles, price bubbles in farmland, for example, in this part of the country, cash rents, farmland. The list is fairly long in the commodities and the assets, where we're seeing some fairly significant inflationary pressures.
What else? I mean, you talked about exports, imports. What are we seeing there?
In terms of exports, the index was down but still strong. In other words, this weak dollar is making U.S. goods less expensive abroad, and that's pushing up exports. And then we got our trading partners. They're doing quite well, what we can sometimes call the BRIC nations: Brazil, India, Russia, and China. All those except Russia doing really good, seeing some real good growth. We're really focusing on exports. Companies are doing real well right now, and our surveys show that. Profitability is going to be up for 2011, not significantly over 2010. 2010 was a very good year for company profits. We're going to see 2011 is going to be good. It's just not going to be quite as, we're not going to see the bump that we saw in 2010. It's still going to be good, very good.
What else about the survey?
You know, Cindy, it's just this bubbles, price bubbles. That's the real troubling impact. We've got inventories were up for the month, and we've seen that for more than a year now, of inventories increasing. Now that's at the supply and raw materials level. So they are growing their inventories in anticipation of greater sales in the month ahead. So that's very good, a very good signal. But on the flip side, again, what's going on in Japan, the disruptions we're likely to see, that's going to come in the form of not able to get supplies, for example, plasma screens, whatever, it go in automobiles. we're going to see that. We're going to see it in the form of higher prices, because obviously when you restrict supply, when you have less supply, you end up with higher prices. And of course, a lot of it's coming from our expansions among our trading partners. They're doing real well. Most of our trading partners, of course, Europe not quite as strong there. We've got still continuing problems with what we sometimes call the PIGS, the PIIGS. That's Portugal, Ireland, Italy, Greece, and Spain. There are some issues there, and that's going to be a problem area. If you're selling in Europe, you got some issues that you're going to face. Of course, if you're selling in Japan, obviously there's some real impacts there.
One thing we didn't mention earlier, job growth, looking at urban versus kind of rural.
It is, Cindy. We're seeing the rural areas still growing jobs. Of course, you don't need as many jobs to have a lot bigger of a percentage increase in the rural areas. We're seeing that. We're going to continue to see it with agricultural equipment manufacturers doing real well. Farmers are spending. They're spending on trucks. They're spending on combines, all other agricultural equipment. There's where we're seeing some price bubbles as well. We're seeing it in agricultural land, as I said earlier. I'm concerned about when this bubble is going to burst. I would like to see the air come out of the bubble slowly. We may see a bursting of the bubble, which could, of course, be a problem. But I think overall, the results for the survey for the month of March were pretty good.